This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
The heat is on. The government ramping up investigations into some of the world's biggest banks. At issue, securities that led to the financial meltdown. But what happens next? And what might it mean for bank shareholders?
Crash Test a Dummy. An influential highway safety group put small cars to the test. And the results are prompting new concerns for automakers and drivers.
And the United States of imports. Why bringing in goods from overseas may be the only way for some small businesses to survive and thrive. We'll meet one owner who's putting the Made in America slogan to the test as our special series continues tonight on Nightly Business Report for Thursday, August 8th.
Good evening, everyone. Our top story tonight, banks under fire. Remember those controversial financial products that were at the center of the financial crisis? Well, they're back in the spotlight. And so is J.P. Morgan Chase. The bank revealed that it is facing 2 investigations by the Department of Justice, both criminal and civil, involving the sale of mortgage-backed securities. And as Jackie DeAngelis reports, J.P. Morgan isn't the only one under scrutiny, as government regulators ramp up investigations of the nation's largest banks.
The government is turning up the heat on banks about their dealings with mortgage-backed securities leading up to the financial crisis. J.P. Morgan said in a filing yesterday it's the target of parallel civil and criminal investigations being conducted by the U.S. Attorney's Office for the Eastern District of California. The probe relates to low-quality mortgages that were packaged and sold in securities between 2005 and 2007.
The California prosecutor came to a preliminary conclusion that J.P. Morgan had violated certain federal securities laws in connection with these products. But it's still too soon to say if these will result in either criminal or civil charges.
J.P. Morgan shares fell today on the news. Investors like Charlie Babrinskoy of Ariel Investments saying lawsuits are a fact of life for the banks.
There's no doubt about it that the share price for J.P. Morgan is lower than it would otherwise be if all of a sudden magically all of these lawsuits went away. But they're not going to go away, and investors know that they're not going to go away.
CEO Jamie Dimon warned investors that legal charges would rise on the bank's first and second quarter earnings calls. One possible addition to legal costs, the New York Times reporting an investigation of J.P. Morgan's mortgage securities by the U.S. Attorney's Office in Philadelphia. Neither J.P. Morgan nor federal prosecutors would comment. That would make 4 different U.S. attorneys' offices now investigating the bank's mortgage-backed business. In addition, New York's Attorney General is suing the bank, alleging investors lost some $22 billion on J.P. Morgan mortgage securities. J.P. Morgan isn't the only bank on the federal hot seat. Today, Pennsylvania's PNC Bank reported investigations of its mortgage pricing and foreclosure expenses. On Tuesday, Bank of America reported a probe of $850 million in mortgage-backed securities. Rockdale Securities analyst Dick Beauvais says the impact on bank stocks is unfair.
When you're suing these banks, you're suing the individual Americans who own their stocks, and they don't deserve to be sued.
But it seems unlikely that the Department of Justice is done. For Nightly Business Report, I'm Jackie DeAngelis.
Well, the Dow and the S&P 500 brushed off today's declines in J.P. Morgan shares and snapped their 3-day losing streaks. Microsoft and Caterpillar contributed to the gains, both up more than 2%, making them the best performing stocks on the Dow Blue Chip Index. Optimism crept into the market overnight when China reported strong trade data and the positive economic news continued here at home. Jobless claims rose slightly last week, but the 4-week average of claims hit its lowest level since 2007. At the close, the Dow was up 27, the S&P 500 gained 6, and NASDAQ was higher by 15.
Over in the bond market, an important message today from Bill Gross, founder of PIMCO, the world's largest bond fund company. In a new note to investors, he said bond investors are in a, quote, bloody war right now. In a message laced with references to the World War I Battle of the Somme, Gross defended bonds as a critical asset class for investors, something he emphasized in an interview earlier today.
Going forward, what we're talking about is a substantial universe of investors that need fixed income. It's fair to say that the boomers require fixed income. It's fair to say that pension funds, insurance companies, all with liabilities going forward for 10 or 20 or 30 years, they require fixed income. And so this isn't a universe that is going to disappear.
Gross also said that smart bond fund managers, presumably including himself, can protect capital and grow it even in a world of rising interest rates. It's been a rough couple of months, though, for bond investors and for PIMCO. Its flagship total return fund is down about 4% since May 1st. And according to Morningstar, since then, investors have pulled out more than $18 billion from the fund.
The fight over the fate of JCPenney takes a new twist. The troubled retailer is reportedly starting a new CEO search. Activist investor and big JCPenney shareholder Bill Ackman sent a letter to the company's board saying the process should be sped up. And he wants a chief executive named within 30 to 45 days. Then there's former CEO Alan Questrom, who ran the retailer from 2000 to 2004. He's considering coming back to the company to help turn it around, not as CEO, but as chairman. The board has responded by saying the company has made progress under current interim CEO Mike Ullman. The stock jumped 6% on the news. Yesterday, the stock was trading at its lowest level in more than 12 years.
Shares of McDonald's were down today, and that's even though people were eating more Big Macs last month. McDonald's says a key sales figure rose more than expected in July, powered by its Monopoly game, strong sales from its new chicken menu options, and McWraps. Positive results in the U.S. offset weaker international sales, especially in Europe.
And Toyota recalling more than 340,000 Tacoma pickups for faulty seatbelts in the 2004 to 2011 models. It's just the latest issue for Toyota involving that Tacoma pickup. Last fall, the truck was part of a recall of more than 7.4 million Toyotas for faulty power window switches that could cause a fire.
From big trucks to small cars, and a new concern for drivers. A report from the influential safety group, the Insurance Institute for Highway Safety, shows that half of the cars tested performed poorly in new crash tests. Hampton Pearson takes a look at which small cars scored well and the ones that didn't.
The collision tests for 12 small cars were designed to simulate crashing into a utility pole or a tree at 40 miles per hour on the side of the vehicle. When the Insurance Institute for Highway Safety evaluated the results, only 6 of the 12 cars performed well. 2 Honda Civic models got the Insurance Institute top rating of good. The Dodge Dart, Ford Focus, Hyundai Elantra, and the 2014 Scion got an acceptable rating. But popular models, like the Chevrolet Sonic, the Volkswagen Beetle, and Chevrolet Cruze were judged marginal, while the Nissan Sentra and 2 Kia models were rated poor.
This particular crash is a big challenge for the vehicle structure. Those vehicles that did poorly, we saw a collapse of the occupant compartment where people sit in a car. Those cars that are performing better, the occupant compartment held up.
The results are important because the small car market is one of the fastest growing. Americans have bought 1.8 million new small cars this year, a 12% boost from a year ago. The Insurance Industry Research Group says new cars have gotten safer in recent years, but these tests are designed to raise the bar and lower the estimated 9,000 fatalities per year associated with front-wheel accidents. For Nightly Business Report, I'm Hampton Pearson in Washington.
Fannie Mae has suddenly become a cash cow. The company that was once synonymous with bailouts made a profit of more than $10 billion in its latest quarter and will write a check to the government for the same amount. Just yesterday, Freddie Mac reported its second-best quarter ever. Diana Olick has been reporting on the story for us. So, Diana, what is driving the profits at Fannie and Freddie?
Well, it's 2 things, really, Tyler. Number 1, the current book of business is pristine. It is performing incredibly well, and that's because mortgage underwriting has been so stringent in the last couple of years. So all of these borrowers who got loans recently backed by Fannie and Freddie are paying up, unlike the loans from the previous several years during the crash. Secondly, Fannie and Freddie have raised their guarantee fees. That is, the fees they charge the banks to guarantee these loans, and the banks, of course, have passed that on to borrowers. So in that sense, they're making more money from the banks for making loans, and the loans are better, performing better. So that's where the billions of dollars in profit are coming from.
Yeah, it's puzzling, Diana. If things are going so well, they're making so much money, they're returning so much to the government. Why is it that President Obama the other day says that he wants to phase out Fannie and Freddie?
Well, because really their profitability means nothing to the administration right now, because the administration believes government should get out of the mortgage market, that there should be some kind of limited backstop, but they want to get private capital back into the mortgage market. And when you look at it now, Fannie, Freddie, and the FHA currently back more than 90% of all new loans that are made. And that's just not the way the market should be, or at least according to the administration. They want to phase it out. It's going to take a lot of time, but they don't want to be in the situation that we were in back in 2009 when the government did have to bail out the mortgage market.
You know, Diana, this Congress has not gotten much done, certainly not on important issues. Will it get this one done? Will it reform mortgage finance?
Well, I can't answer that, but I do know that there is one very strong bill up on the Hill right now, the Corker-Warner bill, that the president seems to have not exactly endorsed that particular bill, but the things that he's putting forth are very similar to what's in that bill, and that's why you saw him this week out in Phoenix making the push again, because this fall would be the time. This is kind of the make it or break it time to get this legislation through. But again, it's not like it's going to happen overnight. We're not going to suddenly see Fannie Mae and Freddie Mac close their doors. This is a long-term phase out, but we do need at least to get the plan in place. Will it happen? You know, you've been to Washington before, guys, right?
Yeah, you bet. Diana, thanks very much. Diana Olick reporting for us.
And still ahead, Wall Street is warming up to IPOs again. Names like Hilton, possibly Twitter, are getting ready to sell their shares to the public. We'll give you a list of some other names that should be on your radar. But first, let's get a quick check on how the international markets closed today. We begin our market focus tonight with Priceline and some strong earnings that came out after the market close. The online travel agency said that earnings surged 24%, and that's thanks to improved hotel and car rental reservations. International booking growth was also especially strong, up 44%. The stock closed at $933 and change in the regular session and then rose as much as 3.5% in after hours. Groupon, the daily deals website, surprising investors with strong second quarter sales and a $300 million stock buyback. The company's new CEO says his focus now is on mobile and pushing more into e-commerce. Shares soared more than 21% to $10.60. This is its biggest one-day gain ever.
Dean Foods, the country's largest dairy producer, coming under pressure today after saying increased competition is causing it to close up to 15% of its factories. The company warned the current quarter would be the most challenged this year, citing falling milk sales. The stock ended the day at $10.20. That's down 7%. And it was not a good day for shareholders of Fusion.io. That's a data storage company that reported a fourth quarter loss, issued a weak revenue forecast, was hit with multiple downgrades, the firm citing an increase in competition. The stock plunged, closing down 23% to $11.39. And it was a big debut for the biotech company Intrexon. Shares soared on their first day of trading as investors made a big bet on the new field of synthetic biology, which some say could revolutionize the way drugs and chemicals are made. The stock priced at $16 a share and closed at $24.73. That's a 54% increase.
And Hilton may also start trading soon. Blackstone, the private equity firm which bought the Hilton hotel chain 6 years ago, is prepping for an initial public offering. Initial reports say the stock could price as early as the first quarter of next year, though it's still too early to say what the valuation will be. Blackstone bought Hilton for $28 billion back in 2007.
And Hilton isn't the only well-known name that's getting ready to IPO, probably. According to reports, Twitter, the online social networking service, is quietly preparing to go public. But if it's looking to attract investor interest, it will have to explain how it makes money, given that millions of people use Twitter every day for free. Julia Borston has more.
Twitter's business model is built on ads designed to be subtle and integrated with tweets so they feel like content, not distraction. First up, promoted tweets, like this one from Staples for back-to-school shopping. Advertisers say how much they're willing to pay to reach a certain number of people in their target audience, say moms of tweens in the Midwest. But marketers only pay when users click, retweet, or give a thumbs-up favorite to tweets like this one from Nokia, and they pay less the more engaging the ad is, designed to push advertisers to make their messages compelling.
Anytime you get a quarter of the population doing something, marketers are going to have a look and try to figure out if they can leverage that kind of site and that kind of behavior, and Twitter's in that position right now.
A second ad revenue stream is promoted profiles. Twitter users, including brands like Chase and FedEx, can pay to promote their accounts to draw new followers. A third ad business is promoted trends, like this one for the new Moto X. A flat fee based on the audience size grabs this real estate above the list of trending topics. Though anyone can sift through tweets, Twitter sells its data through analytics companies like DataSift, which mine for insight into customers and information on brand perception. And Bing and Yahoo pay Twitter to include its fire hose of tweets in search results. No comment on how much money changes hands. Now, Twitter, which is valued at around $10 billion, is expected to file its preliminary documents to go public this year for an IPO in 2014. Twitter will generate nearly $600 million in revenue this year and $1 billion next year, according to eMarketer. But those numbers could be even larger depending on partnerships, like the one it has with ESPN, which embeds clips with ads inside them.
Twitter's only a little bit of the way into realizing the social advertising opportunity that exists today online.
The company won't say how much it'll make from its partnerships with ESPN, Viacom, and others, but driving millions of viewers to Twitter, where they'll see ads, is certainly valuable. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Meanwhile, investors are a Twitter over the IPO market in general, which has been very active in recent months. According to the firm DealLogic, 123 companies have gone public so far this year. That's the highest number since 2007. Here with his take on upcoming offerings, as well as what investors should look for, Francis Gaskins. He's president and editor of IPOdesktop.com. Francis, let me start with Twitter because there is so much talk about it. We don't know when it's going to go public. We don't have all the numbers yet, although Julia gave us some idea of what to expect in revenues, and we don't have an idea of what the valuation will be. But is this the kind of IPO that investors should take a serious look and put money in it?
Well, definitely. If the projections are $1 billion in revenue, it would come public at the $10 billion valuation of 10 times revenue, which is definitely smaller than some of these cloud companies that have gone public. They have an impenetrable, probably, position in the market, and it would be impossible to displace them. And I think what they've done is they've waited, and they're waiting till their business model shows revenue and probably profits. It'll be fascinating to look at their income statement. So it's kind of, Facebook went public too soon, and they were screwed up in the mobile area, and I think Twitter is probably timing it about right. I do understand that they've been talking to the New York Stock Exchange for 2 years about an IPO, so it'll definitely happen.
And Facebook came out at a multiple much greater in terms of revenue than what you just described there for Twitter. But my rule of thumb, Francis, is the sexier the IPO sounds, the farther I want to get away from it.
Well, that's true. When it comes out, it'll probably gap at the opening. Now, when the social media companies were going public a couple of years ago, what would happen? You know, Groupon is one of them. It came public 20, went up to 28, and there are about 10 other ones, including Facebook. What they did is they achieved their peak price in the first 15 to 30 minutes. They never, ever saw it again. So, I mean, it'll be an interesting company. I would definitely not buy it in the first 15 minutes.
Are there any companies that are coming, or they're in the pipeline that are coming up that maybe, as Tyler said, don't have such a sexy product line or name that you are looking at and you think would be really good investments for first-time investors?
Well, there's one called Frank's International. It's a boring 75-year-old company that provides tubular products and services to the worldwide oil industry. And that one is coming, if you annualize the June quarter, the midpoint of the price range for tomorrow is 14. And that's an example of a boring company that could be interesting. However, it'll probably come above the range, and a lot of the institutions are going to go for it right away.
You know, Francis, we talked a moment ago about the possibility of Hilton being IPO'd by its private equity owner, Blackstone Group, maybe sometime next year. What should I make of that one if it comes public, to the extent you can analyze it at this point? And more broadly, when a private equity company brings a company public, they are, quote, smart money. So I'm figuring they make the money and I don't.
Well, certainly that's one way to look at it. Blackstone has had a reasonable reputation, a pretty good reputation with their IPOs. What they do is they don't bring all their stock public. They bring a little bit. They might, in this case, come public at 10 or 15% of the market cap. So what they really want to do is have the stock go up, so their remaining shares go up. Hilton's a good example of what to look for in IPOs. What you want to look for is a brand, and that has a brand. You want to look at top-line revenue. You want visibility there, which you certainly have. And you want to look at the price-earnings multiple. And there's enough companies in that category that we'll be able to see when they do file the financials in the price range, whether it's going to be overpriced or reasonably priced.
Okay. A lot of good tips there. Thanks so much. Francis Gaskins of IPO Desktop. Tyler?
Coming up, what's a small business owner to do when purchasing made-in-America materials isn't enough? He looks overseas and imports. We'll meet him as our special series, Made in America, continues. But first, how commodities, treasuries, and currencies perform today.
Made in the USA, for some small businesses, that's a tough rule to follow. Supplies are seasonal or just unavailable in the U.S. So, to keep their companies growing, they have to look elsewhere and import. As Courtney Reagan reports in our special series, Made in America, that could also be good for the economy and jobs.
Stavis Seafoods in Boston relies on imports. The company ships more than 36 million pounds of seafood every year, and most of that is sourced overseas.
When I started in the business full-time in 1985, about 80% of what we did was domestic fish and 20% was imported. At this point, it's flipped. We've seen that importing seafood has really helped us grow our business.
84-year-old Stavis Seafoods has grown eightfold to 126 employees in the last 3 decades. Consumers now want their fish year-round, and that supply isn't available 365 days a year domestically.
Producers, American consumers, we're all part of a global supply chain.
Laura Boffman, who does research for the National Retail Federation and dozens of other companies and trade organizations, is fighting what she calls an outdated perception that exports are good and imports are bad.
More imports equals more jobs, more growth, more connection with the global economy in the 21st century, because we're a 21st century economy today that is interconnected around the world.
Boffman says 16 million American jobs exist solely because of imports, and that more than half the firms involved in importing are small American businesses, like Stavis Seafoods.
You've got shrimp here out of Indonesia and India. On the other side over there, you have tilapia, which is coming out of China. We also have some domestic shrimp over here.
This freezer holds over 1 million pounds of fish, 200 different species from 35 separate countries. Without imports, this business would look a lot different.
We would have a smaller business. The whole industry would be smaller. There would be some pretty negative impact.
For Nightly Business Report, I'm Courtney Reagan in Boston.
6 little numbers, 3 big winners. Those lucky people woke up a whole lot richer after last night's Powerball drawing. They'll split the $448 million jackpot. Minnesota winner Paul White was introduced at a press conference today where he told reporters he used to joke with his family about winning the lottery one day.
We were playing this game. I don't remember the gist of it exactly, but you had to pick who in the crowd would match this description. And the description was, their financial plan consists of playing the lottery. Well, everybody picked my name, and they thought it was funny then. Who's right now?
To get the last laugh there. The other 2 winning tickets were sold in New Jersey, though their owners have not been identified. It wasn't one of us here in New Jersey.
Obviously not.
The 3 winners will each take home about $86 million before taxes. That's not a bad return on their investment.
86 million richer this morning.
Yeah, pretty good.
That's Nightly Business Report for tonight. Thanks for watching, and remember, support your public television station, even if you're not a lottery winner.
That's right. On behalf of your public TV station, thank you so much for your support. Good night, everybody, and we hope to see you back here on tomorrow night.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a nightly business report news brief. JP Morgan revealed it's facing 2 investigations by the Department of Justice, both criminal and civil, involving the sale of mortgage-backed securities leading up to the financial crisis. Shares of JP Morgan ended lower, but that didn't drag down the Dow, which snapped its 3-day losing streak. The blue chip index rose 27 points, the Nasdaq added 15, the S&P gained 6 points. JCPenney was a big winner. Shares jumped 6% on word it's looking for a new CEO. Biotech company Intrexon made a big splash on the New York Stock Exchange today. Its stock soared 54% on its trading debut. And the Honda Civic is the safest small car on the road, according to a new study. The Kia Forte, the worst. Be sure to tune into Nightly Business Report right here on your public television station.